Okay, so let's get the session started. So just a quick introduction of myself, right? I'm Lee Sing. I provide FX advisory to institutional clients. You can also find me on LinkedIn. So if you guys have any questions with regards to the sessions that were done on Wednesdays, Thursdays, or Fridays. And just a quick disclaimer before we get the session started. The information presented here is not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today, right? We will first take a look at our Fibonacci extension levels. So how we can use these tools to identify support and resistance zones in the markets. So in general, right, as with all the analysis, the live sessions that we have done, you can see that we do use these tools as to support our analysis, but this will not be used in isolation. So down the road, we will also learn how we can combine Fibonacci extension and retracement, right, as well as market structures. We will also take a look at how we can identify support resistance zones, right, and how we can use them to exit and enter trades, along with the Fibonacci extension levels. And then finally, right, we will take a look at Fibonacci extension levels in combination with other technical indicators, right? So this can be moving averages, stochastics, right? So this would be the end of this session, okay? So just a quick recap on Fibonacci extension first, right, before we dive deep into the other details. So Fibonacci extension in general, right, just understand that it's a tool that helps us to project potentially where prices might be going, right? So there are levels for that. So common levels that are used in Fibonacci extension can be your 61.8 extension. So 61.8 Fibonacci extension, 78.6. So these are basically Fibonacci ratios, right? 100%. So 100% just means that the distance that price travels, right? If you project 100% from the bottom to the top, if it reaches 100% level, this basically means that if price travels from the bottom to the top, right? If this is 50 pips, then moving from where we started the next projection, right? We're expecting another 50 pips move. Okay, so that's 100% Fibonacci extension. We have 1.272, right? So 127, basically, 127.2 extension. Okay, ignoring this, right? So 127.2 as well as 161.8. Okay, so these are the common extension levels that I use. Generally, I don't go beyond 1.272, right? So these are the more common ones. So for Fibonacci extension, right, essentially they are zigzag patterns. So the main difference between them and Fibonacci retracement is that for extension levels, right, because we're trying to identify zigzag patterns, trying to project where prices might end up, you can see that all those three patterns itself, they would require 3 points. So you need 3 points in order to project or to use the Fibonacci extension tool. So these are the 3 points, right? Essentially, they're the turning points of the zigzag patterns. Okay, so you can just start off with identifying zigzag patterns in the market. And once you've identified them, you can use these 3 points to project the extension levels. So there are 4 kinds of zigzag patterns we're looking at, right? So we will see in deeper details in the next few slides. So apart from just using zigzag patterns, we want to take a look at market structures, trend lines, right? So if you are using trend following indicators, right, like moving averages, or even using oscillators, right, to help you to identify a break of the range, right? So whenever price moves into a trend, right, before it reverses, it usually consolidates before we see that reversal. So this itself, it's a ranging market, right? So if you want to, you can actually use an oscillator to wait or to help you to better confirm that breakout before taking the trade. Okay, so this is the general idea of Fibonacci extension. So previously I talked about market structures quite a bit, right, in the previous 2 webinars, right? So for market structure, understand that prices in general, right, there are 3 types of market structures: uptrend, downtrend, as well as a ranging market. So in an uptrend, we're expecting price to continue unless there is a change in the lower time frame structure. And likewise in a downtrend, right? So in a ranging market, it's slightly trickier. So you can see that in a ranging market, usually support and resistance zones are being respected. So in a ranging market, right, if you talk about the concept of order flow, so highs and lows. So in an uptrend, right, you can see that the highs are constantly being violated. They are being used as take profits, and the lows itself, it's not broken. So if price pulls back, right, and we're expecting price to continue higher, you can basically put your stop loss just slightly below this previous low, which broke the high, right? So if price breaks below this, right, there's a change in trend. That is when we want to get out of the market. So this is for market structures, right? So in a ranging market, right, the main difference is that you can see the resistance and support levels are being respected. And usually in this case, right, there is no clear direction. So unlike an uptrend, you see successive clear higher highs, higher lows. Downtrend would be lower lows and lower highs. In a ranging market, right, you don't see any of those, right? So there isn't a clear low or high. And you can just hop onto TradingView, right? So if you have some trouble identifying the highs and lows, right, just go on to TradingView. You can switch it to line chart or switch it to close price and just take a look at the significant reversal points. So that can be a start, right? Just identify the significant reversal points and see, just compare the previous high with the current high and see if there is a clear higher low, higher high being formed, or if it's just moving sideways. So in terms of the zigzag patterns, right, previously I mentioned that there were 4 zigzag patterns that we want to take a look at. So for support levels, right, these are the 2 levels that we want to find. Okay, so this is for support. So we want to try and find zigzag patterns that look like this. This is the first kind and this is the second kind. Whereas for resistance, right, it's the other way around. So you can see that there are also zigzag patterns, but they're moving the other way. So these are resistance levels. Again, this is the first type and the second type. So we will take a look at this specific examples, right, on this zigzag patterns in the next slide, right? So take a just remember the zigzag patterns, right, and we will see how we can apply them in our examples. Okay, and at the same time, if I'm going too fast or if you guys have any questions on the Fibonacci extension, right, please do put them under the chat box, right? So I have the chat box open as well. So both the Q&A and chat box is open. So if you guys have any questions, right, just feel free to put them there. Okay, so let's take a look at our next slide. Okay, so now that we have identified the zigzag patterns, right, so recall this 4 patterns that we have. Let's take a look at how we can actually apply them. So this is an example on the Fibonacci extension. You can see that, again, this is the zigzag. And like we have discussed, right? So if we found the zigzag pattern, what we need to do next is just to use the turning points to identify the zigzag pattern. And following which, you can see that price came into a support level. It's basically the 61.8 extension. So this is the 61.8 extension, right? We did cover in deeper details in the previous 2 sessions, I believe, right? So this is just a quick recap before we hop onto TradingView to practice this extension levels. But understand that just instead of just taking it in isolation, right? Previously, I talked about market structure. You can see that over here, there is a clear uptrend, right? Successive higher lows, higher highs being formed before we saw that pullback. So it's important that we identify the right kind of Fibonacci extension, right? So if you go back to the previous slide, you can see that there are 2 kinds, right? One is to find support, one is to find resistance. So maybe one question you would like to ask yourself is, when do I know which one to use, right? When do I know whether I should be using the one to find support or if I should be using the one to find resistance? So deciding whether we are trying to find zigzag patterns that for support levels, right, or resistance, really depends on the market structure itself. So where is the direction? Where's the trend, right? If prices are moving sideways, right, then you can actually use both support or resistance levels, right? You can see that in this case, there isn't a clear market structure. Then in such cases, you can actually use both of this to help you to identify these zones as support and resistance. But if market is in an uptrend, right, then the assumption is that unless there's a change in trend, we want to trade in the direction of the trend. So any pullback itself, right, which means that we're trying to find support to buy. So in such cases, right, you want to look for zigzag patterns that have either this structure, right, or this one. Whereas for downtrend, right, it's the same, right? So if prices were to pull back, we're expecting a further push down. But of course, in this case, right, you can actually use smaller time frame confirmation, right? So as what we saw in our live analysis. Okay, but that's the idea, right? In terms of when, how do you decide what structure you want to use, right? Or whether you want to use Fibonacci extension to find support or resistance. So in this case, it's an uptrend. So we want to try and identify Fibonacci extensions for support, right? And along with that, we don't want to trade purely based on Fibonacci extension. We want to be able to identify these graphical levels as well, right? So support resistance levels or supply demand zones. So this one would be dependent on whether you're more comfortable with using just pure zones, right? Or taking a look at it based on specific candles. Okay, so and then in this case, right, this is an example of how we can use Fibonacci extension for resistance, right? Again, the most important thing is the direction of the market first. You can see lower lows and lower highs here. If I were to just draw the significant reversal points, you can see lower lows, lower highs, right? So it's in a downtrend, which means that if price pulls back and comes into a resistance area, we're expecting the downtrend to continue unless there is a break of the last high. So when price comes into a resistance area here, you can see that again, right? In this specific example, this resistance, so recall in the slides, right, we have two types of zigzag pattern that look like this or pattern that look like this, right? So in this case, you can see that this is the first kind of pattern, right? This zigzag, the one drawn in blue. So again, we take the 3 points to project the extension level. And the other type of zigzag pattern we have is actually this one in purple. So this is the second type of zigzag pattern. Right, you can see here again, right? If you were to project both extension levels, they both line up at 100% at this zone. So one other thing to note with Fibonacci extensions or even retracement levels in general is that they give you a gauge of where prices might end up, right? But it might not be that specific. So what I mean by this is that as much as possible, right, try and find first, apart from just using market structure, right, this is the first step. The second step is to try and find a specific area, right, or a zone where prices might react to, right? So in this example, you can see that prices actually come nearer to this area, right, this zone, which has been tested as a support and resistance previously, instead of coming right up to the 100%, right, before we saw this huge reversal. So how you can actually use this Fibonacci extension, it's that we can see that at this zone itself, right, we have a resistance area. We have 100% extension, right? Two of this 100% extension, and they all line up at around the same price, right? At 138.81 and 138.78. So what this suggests is that if, right, we were to take an entry over here, we want to consider keeping our stop loss above this point. This is a Fibonacci extension level, right, or a confluence level. So basically at this point, right, at this specific point, you can see that there are multiple levels lining up here. So if we were to play a shorter term trade, right, or if you want to take scalps, you want to consider putting your stop losses above these areas. Okay, so this is one way you can actually use Fibonacci extension, apart from just using it to identify it as an entry, right? If you are taking smaller or shorter term trades, right, this can be something that you want to consider as well. So another way, right, so just to digress a bit, right, you can see that other types of Fibonacci confluence would be, apart from just using extension levels, taking a look at the retracement, right? So in this specific setup, you can see that if I were to take a retracement, this is the low, this is the high, and this is the low, right? So if we see a push down and a pullback itself, you can use a Fibonacci retracement here, taking this high and this low, right? Try and find if there are any levels that line up here. If this level lines up with this confluence level, what you can also do is to take an entry over here by keeping your stop losses much tighter and then moving or shifting it to break even quickly. So these are shorter term setups, right? Or shorter term scalps. Quick scalps. Okay, so this is on Fibonacci extension, right? So these are the different types of zigzag patterns that we have, right? So before we go on to that, right, let's hop on to our charts. Okay, so we'll take a look at the different types of charts and also how we can actually use this Fibonacci extension levels. So let me just bring up the chart, right? So this is an example on dollar yen, right? So if you guys have recall yesterday's session, right? So on dollar yen, you can see that with the most recent movement. So if you take a look at a higher time frame, so usually I'll take a look at a higher time frame to help me to determine the general direction of trend, right? So are there questions I'll ask myself? It's that, are there any key areas that prices are sitting on right now? So you can see that this zone itself, right, this area here. Maybe let me just switch the template, right? I believe this was the template that we were using yesterday. Right, so this is the previous one. Right, so if you take a look at dollar yen, okay, so this was yesterday's setup, right? So in general, you can see that on the higher time frame, right, prices were sitting on support level. We saw that earlier. Right, so let's try and apply our Fibonacci extension concepts here. So in this case, you can see that price broke above a resistance turn support level. Right, just looking at it, even if you were to draw a horizontal line across, you can see that price broke above this zone, and right now it's pulling back into this area. This is the picture on the monthly. If you go down to the smaller time frame, right, on the weekly or daily, you can see what prices are doing here, right? So essentially, you can see subsequent lower lows and lower highs. And then right now where we are, there is a change in terms of the structure, right? If I were to put it in line chart as well, right? If I were to just mark out the highs and lows, you can see that the most recent highs and lows here, right? Prices are shifting. Right, so you can see clear higher lows and higher highs being formed. So if you're on the 4 hours time frame, right, you can see this area. This itself, it's the last resistance and support level. So as with all structure, right, you can see over here, right? So as with every setup, we want to try and find graphical zones first, right? So we don't want to just go onto the chart and just identify any zigzag patterns, right? So understand the general direction of the trend, that's one. And then following which you want to try and identify if there are any Fibonacci extensions or retracements. So in this case, right, we highlighted this zone area, this support zone, right? So recall we highlighted the support zone previously over here, right? So again, why this area? Because this was a resistance turn support level. We saw how price reacted as a resistance and then breaking above it. So this itself is the next support level. So after that, right, what you can also do, having identified this zone, it's to use your Fibonacci retracements and extensions. So back when we saw the chart yesterday, right, prices were pushing higher. Here you can see that it actually pushed much higher into the resistance area, which is this zone here. Right, so let's take a look at the current resistance area we have here. So the current resistance area is this high, which is basically this graphical level, right? And how we got this zone, it's based on these two highs, right? So we just extend this across and you can see this is the last high. So this is one, right? So apart from just identifying these graphical levels, you can also take a look at zigzag patterns, right? So what's the nearest zigzag pattern that we have here, right? It's actually this area. You can see this is the extension level, right? This zigzag pattern. So if you want to try and find extension for resistance, there are two types of zigzag pattern. Either it looks like that, or you have a pattern that looks like this. So in this example itself, right, the one we went through yesterday, you can see that it actually corresponds more to the first pattern. So this is the zigzag pattern, right? So after you've identified the zigzag pattern, what we want to do next is to use the turning points, right? So try and find the turning points here and see if it lines up with any of these graphical levels. So let's do that. Right, so if you take a look at the zigzag pattern, right, let me just turn on the extension levels. Okay, so this is point 1. I'm just going to turn on the magnet mode as well so that it helps to capture the endpoints very nicely. Okay, so this is the most recent zigzag pattern, right? So again, open up this key levels. So this extension levels itself. These are the common ones. Okay, so you can see here, right? So what we have over here, we have the 61, the 78.6, the 100, as well as there is another 127. So let me just use that as well. Okay, so these are the 5 levels. So in this case, you can see that the 61.8 itself did not line up with any of this level. You can see 61.8 did not line up with any of the graphical zones, right? 78.6 as well. And then we have the 100%, right? So this is one area that I would like to watch. So if price comes into this zone, right, which it did, it came into this area, right, but failed to tap this 100%, right? But this is some kind of resistance that we have here, right? So when price comes into this area, then this is one level to watch. So another way you can also use your Fibonacci extension levels, right? So recall that these are potential resistance zones that we have. So let's say if you're extremely bullish on dollar yen, right? So given that it's in a bullish market structure, uptrend, right? So if you're extremely bullish and you want to play a short-term breakout of this trade, right? You can see that this is the resistance level here. Okay, so this is the most immediate resistance level. You have 100% Fibonacci extension here. So what you can also do, right, is to wait for either a break and close above this 100%. Once price breaks above resistance, right, it could retest this level as a support before playing up to the next target, which is at the 1.272. So in this case, these are shorter term trades, right? So if price breaks and close above that level, then what you want to consider putting your stop loss will be below this zone. So this is a very short-term trade, right? So this is one way you can actually use Fibonacci extension levels, right? It can be used as an upside confirmation, right? So if you're playing a breakout, it doesn't make sense for us to buy into this level right now when it's near resistance. So what you can potentially do, right, is to wait for this break above this 100% extension before playing more to the upside. Okay, so this is on Fibonacci extension for resistance, right? Let's apply the same concept for support, right? So for support, what we have over here, right? So let me just remove all this. So what we have over here right now, we have the support level, just graphical level wise is this level here. You saw how price tested as a resistance, break and close above this level, and retest this zone as a support. You can see the break and close above this area. And if I were to switch it in line chart, you can see this clearly as well. So if I were to draw a horizontal line across, you can see that there is this support and resistance level here. Right, so price testing as a resistance, break and close above it, retested this region as a support. So what you can do next, right, having identified the support zone, we want to use our zigzag pattern to try and find, right, if there are any support zones that line up here. So where is the zigzag pattern, right? So let me just draw out the zigzag pattern, right? There are two kinds of zigzag pattern that we have to find support. Okay, so can you guys just tell me, right, just based on this pattern, right? Do you see pattern number 1 that it's more in line with what we have? Or is it pattern number 2? Right, so try and identify if there are any of this, right? Either number 1 or number 2 that's being seen on the current setup here. Okay, and put your questions, type your response under the questions chat. Okay, so let's practice our Fibonacci extension. Right, so do you see a zigzag pattern that looks more like number 1, or do you see a zigzag pattern that looks more like number 2? Okay, so try and put your response under the questions chat, right? Maybe I should draw number 2 clearer. So number 2 actually looks like that. Right, so ignore the previous one. Just delete this. Okay, so I'll give it about maybe 5 or 6 more seconds, right? Try and identify whether you see a Fibonacci extension pattern that looks like number 1 or number 2. Okay, so the Fibonacci extension pattern, right, that looks like this is actually this pattern here. So you can see, right, this is the extension level, or rather this is the zigzag pattern. So this is actually more similar to number 2, right? So when would number 1 be spotted? Number 1 would be spotted if we see some kind of consolidation, right, before price push lower. But do keep in mind that if we were to see this, right, we need to ensure that the turning point itself, the last high, has to be lower than the starting point. Okay, so if price did something like that, then in this case, right, this would not be as relevant. Okay, so once you've identified that, what you want to do next, having found our point 1 and point 2, so we have this zigzag pattern, right? So what you want to do is to identify the turning point, use it as your Fibonacci extension. So this is point 1, point 2, and point 3. So when you open up these levels, right, you can see that the 61.8 extension lines up with this zone. So again, right, don't take them in isolation. It's more important that you identify this support resistance areas, right, instead of trying to take every extension level. So you can see here, right, the 61.8 extension, it's in line with the support zone, right? You have your Ichimoku cloud. Price is holding above this level as well. So this is one, right? What you can also do, right, apart from taking your extension levels, would be your retracement, right? So you can see that for retracement, we try and identify impulsive move before the pullback. So this is the most impulsive move, right? I try not to take moments where, for example, this itself, this is also a potential low and high. But if you notice this point, you can see that price whipsawed around this retracement. So if you're to take a retracement, right, as much as possible, try and find areas where this whole move up is smooth, right, rather than having price whipsaw across this area. So one way to check it would be to take a look at the trend line. So if you're to turn on, if you're to open up this retracement trend line, right, the settings, you can see that there's actually a dotted trend line that you can use. I'll put this in dark purple so that we can see this clearer. Right, but there's this line that you can use, right? So essentially when you draw a retracement level, try to have this line act as a line of best fit instead of, this zone where price just whipsaw across this area. Okay, so this is why I would use the trend line here, the most recent move. And then once again, right, for retracement levels, there are more retracement levels, right? The ones that I really like would be the golden ratio, right? The 61.8 and your 78.6. this, when it's in line with a trend line, right, can be pretty useful. So in this example, right, the 50% would probably be more relevant, right? The 50% retracement lying slightly lower. So if you're playing a short-term setup, right, taking this trades from here, you want to consider putting your stop losses below this zone, right? So again, right, this is one way, right? So there are many strategies that you can actually play around with for this Fibonacci retracements and extension tools. But one thing you to note is that when price comes into this zone, right? So if you want to, and I would suggest that would probably be better, right? Is to wait for confirmation on your lower time frame. So you can see here, right, when price pulls back into this area, right, unless it's news driven, where we see this sharp spike before a higher move up, but you can see that when price comes into this area, right, on the smaller time frame, it will start forming your lower lows and lower highs, essentially a smaller time frames downtrend, pushing into this support area. So if there is a respect of this zone, right, and we're seeing a bounce off this level, then we will first see that reversal happen on your smaller time frame. Okay, so it's a relatively simple concept, right? But it's actually very useful to help you to filter out which zones are the ones that will potentially hold better, right? So of course, as with every setup, it's a probability, right? There's always a chance that price will go against us, but we try to increase the odds in our favor. Okay, so this is for an example on how we can use support resistance levels and also Fibonacci extension. Right, let's take a look at another example. Right, so in this example, let's take a look at, for example, euro dollar. Okay, so you can see on euro dollar, right? So let's say this zone here. So you can see that prices are still testing this range, right? Still within the support resistance level. But just taking a look at where we are currently. So this is the area, right? You can see prices are trading. Support resistance levels, you can see again, this is the zigzag pattern. Right, so you want to use this extension level. So there are two zigzag patterns actually. There's one here and the most recent one. So in this case, right, when there are two zigzag patterns, you can see prices just moving sideways, right? In this case, I'll use the most recent one. So let's take a look at this, right? So 0.1, 0.2, and 0.3, the same zigzag pattern that we have. So we've identified the resistance level to be much higher, right? This area. So in this case, this will probably be more towards the 100% or the 78.6. 78.6 is nearer. So in this case, right, the 78.6 extension here. Okay, so this zone. So if price were to break above this range, right, this is one area that we want to wait for price to break and close above before we see any more upside. Okay, so, I have a question, right, by further. Can you take a look at US 100? Let's take a look at US 100. Okay, so for US 100, right, let's see where we are currently. So again, on the higher time frame first. So you can see on the higher time frame, if we're on the weekly or even the monthly, you can see the zones, right? So we highlighted all these areas as resistance and support levels. You can see the most immediate level, it's here, right? So price broke above this level. Here, resistance and support currently is coming into a next high. So just on the monthly or the weekly, this is the weekly picture. You can see the most recent move. This is the zigzag pattern here. Right, so again, taking these 3 points, Fibonacci extension of those 3 points. Right, let's take that and see what we have. 0.1, 0.2, and 0.3. Okay, so the 100%. So let me just open up these levels. Okay, so we have the 127.2 just lying slightly above the previous high, right? So this is one. So that's the picture on the weekly. If you take a look at the picture on the daily, so likewise, you can see on the daily, right? So we actually highlighted this zone. If you can actually extend this to the left, but the idea is the same, right? So support resistance levels, you can see it on the weekly, on the daily. And if I were to draw a horizontal line across, you can see this area as well. Oops. Okay, so if I were to draw a horizontal line across, right, see how price tested this area as both a resistance and support. Okay, you can see this zone, right? So price coming in to test it as a support twice, and then again as a resistance. So when price comes into this area itself, right, we saw the pullback once over here. So this is on the daily. If you take a look at the 4 hours, right? So where we are currently on the 4 hours, you can see that new structure or a new low is being formed. This is the last low, right? So if you take a look at order flow, there are subsequent higher lows and higher highs, right? So recall that when we come into a resistance area, if there is some kind of a hint or some kind of signal that prices are respecting this level, you'll see that there's a break in structure. So where we are currently, we have a low that's being formed over here. Prices are pulling back into a resistance zone, right? So this is still the resistance zone, this gray zone that we have here. So prices are coming into a resistance area. So this is the picture on the 4 hours. You see that the low is being formed here. So if price, right? So if your 1 hour or 15 minutes time frame is starting to show that resistance areas are holding, support levels are failing, right? Or your supply are starting to be in control, right? What this suggests is that this low itself can be used for take profit, right? If you're taking short positions. And it's also in line with your higher time frame because prices are right now sitting on a daily resistance. Okay, so this is just the thought process behind this. So right now we have a H4 low that's being formed, right? We're coming into a resistance area here. This is on the H4. So you want to zoom down to either the 30 minutes or 1 hour, right? So you can see that this is the whole leg up. So right now where we are, at least on a 1 hour time frame, you can see that the most recent market structure, higher lows, higher highs being formed, right? So how do we know when it's going to reverse, right? This is when there is a change in market structure here. Right now, the most recent leg itself, the pullback is still bullish, right? So price will come into resistance area before it reverses with the last break of the previous low, or price could always continue further up, right? So it could continue to form your higher lows and higher highs and break this resistance completely. So I would say that right now where we are on the daily, right? If you are on daily picture, it's coming into a resistance area. But if you go on to either the 1 hour or 4 hours, right? So 4 hours, there is a low that's being formed. This can be a potential target for shorts once your smaller time frame. So if your 1 hour or your 15 minutes, right, are starting to show that prices or demand area support levels are failing, right, then this would be a potential target and we can see a bigger drop, right? But where we are on the 1 hour right now, right, there is no signs of reversals yet. Okay, so you can see that still subsequent higher lows and higher highs being formed. So we probably need to wait, right? Price could come if you're on the 1 hour, right now the most immediate support level is this zone here. Right, just looking at graphical level, support and resistance levels, the most immediate level, it's this area. I'll put this in blue. So price could come into this zone, right, before it pushes higher. Right, so a break of the low itself would give us a clue on the change in market, the change in the market's direction. But right now where we are, right, for me, the pullback right now on the 1 hour is still bullish. You take a look at this move, right? So this area, again, right, if we're to do a Fibonacci extension, basically zigzag patterns, right? You can see this is the most immediate zigzag pattern. So when we do that, right, let's see what we have, 0.1, 0.2, and 0.3. Same thing, right? So open up the key extension levels. You see the 61.8 extension, right, lining up in this blue zone. Okay, so for me, this is the most immediate support level to watch. Right? If price comes into this area, right, you can see how price react here. If it comes into this zone and you're seeing a change in market structure coming into this area, a break of the last high, we could see more upside. If not, right, we want to wait for a clear low to be formed. And once that low itself failed to break the previous next high that we have, right, then it's a potential target and it's also more in line with the higher time frames direction. Okay, so I hope that answers your question further. Okay, so yeah, with that, if you guys have any other questions, right, do put them under the chat, right? I'll just go through a quick summary of what we've run through so far, right? So we talk about Fibonacci extension levels, right? We covered on support resistance areas, and I think more importantly, looking at market structures, right? So market structures can give you a clue on the direction of the trend. If you take a look at market structure, right, the concept, it's very simple, but it can be very useful in helping you to identify even reversals on the smaller time frame. Right, so given the fractal nature of markets, if we're to see any reversal, it usually takes place first on a smaller time frame before it goes to your bigger time frames. So we take a look at Fibonacci confluence levels as well, right? So taking a look at different levels that line up in specific areas, right? So we also take a look at how we can use these zones, right, for support, resistance, or even to identify breakouts. So in this case, you can see that if price, right? So we talk about the previous example where we can use Fibonacci extension, right, as a breakout. So if price breaks and close above a specific resistance, right, and we're long, right, using the example on dollar yen earlier, right, and in such cases, right, we want to wait for a break and close above a key extension level. And when there's a break above that resistance, right, that could be a potential entry. Okay, and then there is a Fibonacci extension, right? So for this Fibonacci extension, we will probably cover in deeper details, right, on how we can combine them with different indicators, right? So for today itself, right, you can see that we are looking more at market structures. So after which, I think in the next session, right, I'll cover a bit more on stochastics and moving averages and how we can combine them with Fibonacci extension. Okay. Okay, I have another question. Thanks, but another off topic. How can I activate my chat? I can only post on Q&A. Interesting. Okay, I'm not too sure how you can do that. Right, it could be a permission. It could be permission. Ah, okay. I think this should work, right? So I think I have to activate it on my end. Right? Does this work for you right now, Further? I believe this should work right now. So I think I will have to activate the chat on my end, actually. Ah, great. Yeah, this works now. Ah, that's awesome. Oh, thanks for letting me know that. I'll make sure to activate it the next time. Okay. Okay, yeah, so that's all that we have for today, right? So thanks everyone for staying with us till the end. Right, it's great having you guys. Thanks for keeping the session interactive. Right, so do come with more questions. So for tomorrow, we will be doing our live analysis, right, and also a review of the setups. If you guys have any other setups you want us to take a look at, right, do join us as well and put them under the chat. Okay, so thanks everyone. Stay safe, trade safe, and we will catch you guys again tomorrow.